All right, everyone. Thank you very much for joining us today. We are very excited to welcome on Vinney Chopra today to talk about investing in multifamily real estate, but specifically assisted living facilities. So, Vinney, thank you very much for being on with us today. If you could do me a favor, I shared mouse control with you. Just try to see if you can advance the slides real quick.
Oh, okay, sure. Let's see. Am I able to? Let's see. No? Oh, yeah, there we go. Yeah, we
Uh,
do. Should I go
oh,
back? Yeah,
yeah,
there.
no,
I'll
we'll
just
start.
do one. One
Yeah,
at a time.
we'll start here, and then I'll hand it over to you in a second when we get to your slides. It's just right
Okay.
after we kind of give the basic intro. So
Yes.
for everyone attending today, please do type in your questions to the chat box. I'll monitor those and frame them to Vinny as they come up when there's a good point. Also, if you want a copy of the slides, I have attached them as a handout to the presentation, so feel free to grab those. Has all of Vinny's great contact information as well as ours if you have any questions. So with that said, again, thank you everyone for joining us today. Let me just make sure. Yes, and Jay, everything today is recorded so you can view it on our YouTube later. So with that said, my name is Alex Perny. I've been doing this for just about 10 years. I've had experience in well over 1,200 individual investments, ranging from everything from single-family homes to multifamily, international real estate, cryptocurrency, anything that you can pretty much do in a self-directed IRA. I have had experience in. So if you have questions specific to the tax advantage side of investing with this stuff, I am always happy to be a resource for you. My contact information is right up there on the screen. If you want to grab it, it'll be there at the end. And if you want to grab it on the handout, it's there as well. So also, we are very pleased to welcome on Vinney Chopra. He is the principal and general partner of Monial Senior Living. He has over 40 years of real estate experience. He's also a very well-educated individual, is practical and higher education. He has an MBA from George Washington University, which is also a very impressive thing to tack on to his storied career as a real estate investor. Just a quick disclaimer before we do get started. Anything that we are presenting today is for educational purposes only and should not be construed as investment advice, and we do not endorse or promote any investment products. If you are going to enter into any type of investment, you do need to consult with a individual who can provide you with that kind of advice, such as an attorney, accountant, or financial advisor, before actually pulling the trigger on anything. Again, always trust but verify. Now, before we kind of get into what Vinny's gonna go over, if you are interested in doing these kind of investments or getting more involved with your retirement and doing any type of multifamily real estate, whether that is commercial multifamily with just rank and file, people invest in apartment homes, or you're looking to do something like we're going to focus on today with senior living, all of those things can be accomplished through the tax advantage plans that we administer here at Advanta. Things like traditional IRAs, Roth IRA, so you can capture all of those kind of things without any taxes, and specifically some really interesting things that you can do with these types of accounts and investing are utilizing things like solo 401k plans as well, which we have some great presentations on. If you want to go to our YouTube channel, which is youtube.com/Advanta Largo, you can get a lot of great information there on utilizing solo 401ks, which are really powerful in the context of investing in syndications. Additionally, if you want some more information, like I said, our YouTube channel is a great place to go. I also host our podcast, which Vinny has been a part of, the Alternative Investing Advantage podcast, which I'm really proud to say we're coming up on our 50th episode mark. So it's been one of those things where doing it for almost the past about or a little bit more than 3/4 of a year has been quite an interesting road, but we have some great content on there as well. So if you want some more general information, I'd encourage you to either reach out to Vinny, look at our podcast, look at our YouTube channel. And again, all of our education we do here at Advanta is free of charge. So make sure that you're getting that good information. And with that said, I'll turn it over to Vinney Chopra. He's going to do a little bit of basic introduction, and from there, again, I will monitor the questions. So if you do have those, type those in, as all of your audio has been muted on your end. So with that said, Vinny, again, thank you very much for being with us today.
Oh, thank you. Thank you. It's such a beautiful day. Beautiful day. Thank you, everybody, for taking the time to be in this webinar. Again, I'm Vinney Chopra, right here in the Bay Area, in San Francisco Bay Area. I've been living here for 42 years this year. I've been married 42 years, lovely wife, Kanchan, and our two children, Neil and Monica, who live also nearby with right here. And it's been tremendous journey in the real estate world for us for me and all of us, from the single family I started. We'll just kind of go straight into the PowerPoint a little bit. Let's see the second. Okay, there we go. With the Monil companies that I have, several of them, and then Senior Living Multifamily Academy, which I teach also. What I preach, I teach kind of thing. And let's see if I could go to there we go. Yeah, disclaimer, which we already did. Thank you, Alex, for saying that, this is educational purposes only. No securities are being sold. I teach about syndication. That's for the book I wrote, Syndication Made Easy, and then Positivity book. You might see a slide. And I came from India with $7 MBA. You talked about it, 42 years, 2 children, and 650 million going to about $1 billion now in our portfolio with the assisted senior livings that we are building and so forth like that. So let's go to the next one. And oh yeah, if anyone of you like to see some slides of the, my podcast and all, like Alex and these are the books right there. Thank you so much. Senior living investing and coming up right now because I'm so passionate about the topic that we're going to talk today. So we could go to the next slide then. And again, you could grab them. 2 of the books are available on Amazon in audio, Kindle, and everything like that. Let's go to the next one. And oh, that's my shows. I do a live show tomorrow at 9:30 also, if anybody is interested. Vinney and Bo show. I'm doing podcast also and everything. So let's go to the next one. There we go. If you want a copy of the free book, by the way, anybody, you could just go to vinneychopra.com, free book, and you'll be able to get that. Let's go to the next one. So this is where I really started 15 years back with 14 units for $180,000. And now I'm buying all these things. You could see 34 million, 52 million, 35 million. So anybody can really invest into really great deals. You could be limited partners, you can be general partners, things like that. So just to give you a little track record who I am and what I'm doing and things like that. These are different companies that I've started in hotel, in academy, senior living management, all that stuff. But let's go to this one, Silver Tsunami, and the 3 big tsunamis going on right now. I'll just kind of go fast right there. And they are, okay. One is the millennial tsunami, which is a big one, the generation XYZ, how they are liking renters nation is becoming bigger and bigger need for multifamily. In the millennial category, there are so many different reports out there about Generation Z, millennial renters returning gateways, all that stuff. And then it's again, USA and around the world also, it's becoming more and more re-entering the renter nation again, is what in this slide. And you get the whole deck, like Alex said, I don't want to take away too much time. This is what we're going to talk about today, which I'm so passionate about. I'll be hitting 70, going on 30, actually, my wife says. I'll be 70 years old in this August, but the silver tsunami, 10,000 people are turning 65 every night in USA, and it's going to keep on doing it for until 2031, when the last baby boomer will be turning into silver age, 65 and plus. So this is where we are talking about the fastest growing group of renters are the senior citizens, and there is a huge need. Huge need. Renters older than 60 jumped 43% in the last decade alone. Austin, Phoenix, Fort Worth had the biggest boost of renters over the age of 60. Florida, I'm in Florida big times. Cape Coral, Punta Gorda, all these places around, Orlando, all that building assisted senior living, which you will kind of see. And I'd love to answer more questions and all that. But let's talk about the third tsunami I talk about is the immigration tsunami. As you know, our birth rate in USA is less. So we do have influx of immigration. That is a big tsunami of the rental market. So like Alex is kind of giving you these different ideas, about investments in self-directed vehicles. You could invest into anything in commercial, you will be able to do well, anyway. But let's go here. Immigration supports demand, all that. Let's go to the next one there. Why is Vinney excited for the next 20, 30 years? I'm looking my goal of 100 years. If I live to be 100 years, I want to pass that actually with technology and med tech and everything. It's probably possible if I keep the attitude right and really give myself, I think I can live that long. But the key thing is right here. See, we have almost about 56, 58 million people, 65 and above, and it's going to become 100 million. 1/3 of our population is going to be, in the senior category. That's what Alex is talking about. He brought me here today. And the other part is this one, this graph over here, the green one, 85 plus population is going to be increasing from about 7 million to 21 million, 300 times. What? Three times or 300% increase. That's where I'm talking about. Senior tsunami is here to stay. We need to jump on the bandwagon. Investments, developments, building. There is going to be huge shortage. Look at this. Almost for the next 30 years, almost 30 years, if everybody gets on the bandwagon for our seniors to give them the best of the best, place to live and everything, still there will be a huge shortage. So it's a biggest, tsunami, I say, and the demand which is there. Facts around senior housing. 2 million Americans will live in senior communities by 2030, 2 million. And from, doubling and then 58%, you could kind of read it, later on. There's so much out there. I want to kind of go, quicker so that, and senior housing, how the returns are there, even better than the apartments. A lot of people, and I've been in apartments. I bought 39 syndications I've done or something. It's amazing, how many apartments returns have come. And now apartments are selling so expensive right here. But senior living stabilized even produces more results, more money, returns to the investors. So that's kind of nice to know. And please look through it. Aha. Then, a lot of people ask me, Vinney, guess what? What will happen if there is economic downturn? We had that 2008 and 9 downturn, economy just fell apart. And maybe look at the stock market now, what has happening in the last 1 week. It's mind boggling. 100%, 100,000% down, I don't know, today, I've been on little different presentations today, but the thing is in 2008 and 9, even the apartments went down, but senior assisted living and senior housing never went down. Look at this here, because it's a need driven market. It's a need driven, not a choice driven. All right. So that's something to really be looking at. And why senior living, senior housing construction, it did go down, as you could see. From 2002, it's going, average was like 4%, but then it's been touched in 2017. Then the COVID came, as you all know, last 2 years. So that is what has kind of impeded some of the permits and everything. And now it's going to come back up again, like in my companies and everything, my partner, we are, doing so many developments and building. Why senior living? Again, you could see trillions of dollars will be spent each year for the many years to come. And this is in trillions. We are talking about 5 trillion, 4 trillion, 6 trillion. Look at that. In just next 6 years or 5-6 years, it's going to go to $6 trillion. I'm not saying all housing. It's going to be connected to senior living. It's going to be all the products and different things and services and housing and, medical and all that stuff, right? So it's a good one. My team really put together beautiful things, and REIT performance, how it's performing after the COVID. We kind of put a slide over here. Please come back and, look in the PowerPoint. Cap rate compressions, you're seeing that all the time happening with the senior multifamily and senior housing. But the good part is, look over here. This one is the senior housing and care right there, right? The green one. And then this is the multifamily. Of course, multifamily right now is going at 4 cap. 3.5 cap, 2.5 cap. It's amazing what's happening. Yeah, it's mind-boggling, But anyway, please, you could kind of look at that, our intentions. This is something I want to talk about. See, there are several segments of senior housing. Right from the left side, choice-driven to need-driven. All right. So from here, age-restricted apartments, no regulation. Our seniors can just, get into rental side or buying condominiums or downsizing, getting into country clubs and gated communities, all that, right? It's age-restricted apartments, 55 plus, things like that. You could invest in those. Independent living, which is the second one, little regulation because they need some housekeeping help. They need some transportation help. So these are again communities where there are a concentrated number of them, and then they are able to provide that independent living with little bit regulation, little bit help. Then comes in the increased acuity is the word, assisted living and memory care. And that's where I thought I can make a big contribution in the world. My partner and I, we are in that circle actually. So we are in the assisted living, state licensing in both memory care, dementia is getting bigger and bigger problem, challenge in our country, around the world also. So assisted living, medication help, batting services, care services, private pay, average stay about 22 to 30 months in our communities. And then memory care, dementia and memory care, we build these together. That's what, and I'll show you if we have some time, depending on, we will show you a picture or movie, even what we build. And if anybody is interested, you can always reach me, vinneychopra.com, and then we could, share with you all the things. And then over here, memory care, then there is need driven. That's where the skilled nursing homes are there, all the hospitals, and it's federal licensing. It's very complex business, very complex. So we are not in this at all. We are only in the middle. I just wanted to share that. And then this is a business plan that, again, I just will touch it in the sense that we do all the work in my company and we are not selling anything, by the way. I do teach syndication. There's no offering, nothing at all. I'm just showing you the process, what can happen for anybody locating the perfect site, analyzing the market in depth, doing the analysis, then getting the permits and construction loan and everything. And then investors' money comes in for myself and syndicators and developers. That's how they do it. They come in here, then they develop the land and build these beautiful facilities, and then we lease them up right there. And at the end of 2.5 to 3 or 4 years, or even they could keep it till eternity, right? Those communities. And then rental, these are rental, or they could do 1031. In our case, we could save on taxes and do it next and the next and the next, kind of that, right there. So that's, you could come back. Senior living is the new frontier. And again, as you can see, 2020, there will be 74 million adults over the age, and shifting senior, to 13% US population to 19%, and it's growing like crazy. I would love to answer some questions. What do you think, Alex?
Yeah,
Any questions, brother?
yeah, absolutely. I have a couple for you, and then there's
Yes.
one that came through, and you had mentioned it. So, with regard to analyzing these segments, is there kind of a benchmark that we're seeing as far as when people are typically seeing to move out to some type of whether that is assisted living or whether it's some type of like more senior, let's just call it senior living, and then it kind of scales up, like you said, into assisted and then memory care and things like that. At what age are we typically starting to see those people kind of transition out? Because people are certainly working and living longer. So is it one of those points where we have kind of a benchmark for where we can say, okay, we've identified the baby baby boomers as a bunch, kind of tracking when they were born and that whole demographic. But is there kind of a pinpoint age at where we can say, these people are going to start doing this? Because then that might help investors drill down, okay, what areas are best for me to invest in? Because,
Yes.
obviously, places with less population, you're probably not going to, go in and put a huge syndication in Bozeman, Montana. But, you have to look at the influx of where people want to live in their, golden years, places like Florida, California, Texas, probably warmer climates. But is there a specific age group that you're targeting to say, okay, these people are really going to be the focus of where they're going to go?
Excellent question. Very, very good question. Thank you for putting it together. The key thing is that we are finding as baby boomers are turning 65 and above, they're healthy, just like you said. They want to live independently. Many would love to live in their own homes, or they have already downsized, maybe in the community they grew up, they have friends and everything, right? That's the best place, near to the grandchildren, near to their children, everything. But when a partner passes away, the life starts to degrade. And that's where there is a void. And then if somebody has a slip and fall in the shower or in the tub, and now they are not able to move around or drive, or sometimes they are able to not even take care of, cooking is another thing, right? ADLs, activities as daily living. If they find some impairment in there, they can pay for themselves to get a house assistance, right? Or somebody coming to their home and helping out. That's ideal. But a lot of people cannot afford that in USA. So that's where assisted living communities were born, and there are residential and there are commercial. So residential are like, 4 rooms or 4 beds or 6 beds, or, taking a house, big house, turning into assisted living, memory care, things like that. So those are many of them in all over USA scattered.
Gotcha.
So
Great.
age group is about, probably I would say 71 or 70 to about 95 to 105. That's
Okay,
what.
great, awesome. We have a couple other questions we can point out
Sure.
here that people are filing in.
Yes.
Then this is kind of probably one you're going to answer on a very like high level. But someone asked, how do I 1031 exchange as a passive investor? I'll let you answer that.
Okay. Essentially, you have to work with the syndicators like myself or others. In our case, we are building so many assisted livings right now. We are able to actually take the 1031 money. We are doing, like, raising money, joint ventures or whatever. And then we are able to bring them into the next project. As you know, 1031 depends on the timing is big issue, right? But because we have so many projects going on, we are able to take that in the 2.5 years or 3 in our case into next one and next one and next one. Now you have to talk to the company that you are going to be investing upfront if they can do it or not. Like, I've done 39 syndications so far, and I have not done 1031 because if there are 50 investors, you cannot take 50 into different ticks, tenants in commons, and into 1031. So there are hardships, there are challenges, but there are operators who could do it.
Yeah, absolutely. And again, he brought up also, a tenant in common holding is kind of an important aspect if you're looking at offering documents to see if it is something that you can utilize for a 1031. That's 1031s are kind of a whole presentation in and of themselves for the individual
Yes.
who asked that question. So got a couple other questions. Why don't we just knock
Yeah,
these out real
please.
quick?
Please.
So let's see. So then what is the typical time frame for assisted living projects? So like what's kind of the like horizon and like exit strategy for these? Is it something that's a
Yes.
long term, or is it kind of focused kind of on the similar trajectories that, let's say, a more traditional multifamily apartment syndication might be?
Good point. Very good point. As you know, it's a development project, and lots of developments are going on right now in USA because there is a big shortage of the housing. A lot of multifamily condominiums, townhouses are being built. We are building 88 to 94 units in our case, and we do the changing of the permitting and changing of the jurisdictions and all when we buy the land, and we do everything on our clock. 9 months to 12 months it takes us. Then we bring only the investors' money. At that time, when we put shovel in the ground, we build it in about 11 months, the whole thing. But while we are 70% built, we start getting the leasing done, like the one in Punta Gorda as an example, and it's solely sold out. Nobody can invest in it now because we have 50 residents right now who have given us deposits. I'm not even open yet. Wow. 50 deposits of the seniors who want to come into Hampton Manor of Punta Gorda, Florida. And that's what it's all about. Then in about 2.5 years, since we started, we'll be able to sell it to another group or buy ourselves or keep it for 5 to 7 years. A lot of people like to get their money back in 3 years. So that's why we designed it for it to change and do 1031 in the third year to the next project or get the cash out, if that makes sense. It's a little bit. So what it is that we are able to build it from the 9 months to get permits and everything and loan to the 11 months. So that's 2 years right there.
Awesome.
And then
No,
we do stabilization. Yeah. Yes.
Your audio.
Oh, my idea is okay.
Okay, great. Another question. You mentioned the compression and cap rates.
Yes.
Yeah, it came back. There might have been a little skip, but
Okay.
we'll just move forward.
Yes.
You mentioned compression and cap rates for multifamily investments. Are your investments based on cash flow or appreciation due to location and growing demographic?
Okay, you know what? Actually, what we built, as I'm just showing some of the pictures over here, what we built, mostly it's because of our development skills. So when we built, just to give you an example, again, it's an example, sample, real numbers. We built the facility in Punta Gorda, just to say that, for 16 million. It's appraised at 19.5 million right now. So there is a 3.5 million equity gain just because of our hard labor and everything. When we stabilize it, it'll be worth 24 million. What? Oh my gosh. So in about 3 to 4 years, the value goes higher. So we are building cap rate. If you were to look at cap rate of a brand new building, 2022 built, brand new A++, just like this one. By the way, these are some of the pictures from Cape Coral. I'm showing you all of you, but all of them look the same. They all look the same because we got the same cookie cutter. We do it, and all that stuff. Oh, that's it. I'll just put it over here. So essentially, you could build these at a much higher cap rate, which is unheard of, just because we are general contractors ourselves, and we do economies of scale and the products, and most of our vendors are the same. Where to buy lumber, where to buy this, where to buy the furniture, and everything looks identical with the lounges, dining rooms, and the what are these? Oh, of course, transportation we have.
I think you might be switching them not on the webinar. I think you might have clicked on a different screen.
Oh my gosh. Okay. Oh, am I not?
Yeah, you got to go back over to the webinar screen.
Oh,
and then
webinar, brother. Okay. Oh, I'm right there. Oh, my bad.
There you go. Now you can advance the slides and everything.
Oh, okay, sure. Let's see here. I'm trying to. It doesn't let me. Okay, there we are. Yeah, there we go. Oh, we got some more. No, this. Okay, there we go. Okay, there we are. Yeah. Okay, this is what I wanted to show right there. So we are building movie theaters, spas, hair salons, library, sunroom, game room, dining halls, everything in our communities. So it's a resort kind of living with the nurse, one nurse only, and caregivers, and then 3 meals a day, cooking, cook to order, all that with ADLs and all that stuff. So,
awesome. Great. Yeah, let's just knock out 2 more of these questions and then we can get going forward. We have a question. How liquid are the passive investor interests? Assuming they're probably restricted.
Oh, they are. I mean, at least like in the ground up, 3 years. You can't pull out money before 2.5 to 3 years. That's when we sell, because anything development dirt doesn't bring any cash flow. When we are building it, it doesn't bring any cash flow. It's the day we occupy, we do cost segregation and get a major loss, on the LLC. So the major gains comes in the third year, equity gain we call it, or like that. And then major loss also comes due to depreciation, so that our investors don't have to pay too much taxes.
And then the last one we'll get to is what kind of cash on cash returns are typically, or can be, I should say, and this is kind of a hard one to answer, but what kind of returns are being seen as far as like percentages go on the purchase of interest, for these kind of things?
I'll give
Is
some
it similar?
examples. I will give you some examples. Again, those programs are sold out. 18% return per year. I've given 16% in this market is what we are giving, 16. And again, I'm doing 506C, which is I can talk about the returns in the show because they are the one with only accredited investors. I know there are a lot of syndicators out in the country and so forth. So, since somebody asked me the question, yeah, 16%, which is not bad at all. That's like 48% for 3 years. If you do 1031, that 48 becomes, I think total is like in 3 cycles. If somebody stayed with me for 3 years in a row, and again, I'm talking about 1031C, no, 506C offering, then they make 326%, I think. We just did a slide show for our some investors. So it's pretty exciting,
Great, yeah. We'll continue on to get through some more of this. Great questions, everyone. Keep filing them in if we didn't get to yours. I am monitoring those. So just keep on typing them in, and when we get to another good kind of breaking point, we will certainly field those over to Vinney. So keep them coming, and Vinney, you can keep going on.
Thank you. Again, luxuries and everything. I mean, that's what we are really, our motto in our company, again, I'm talking about, is to spoil the seniors who have spoiled us. That's our motto. Money is not the issue. We provide all these 3 meals, ADLs, the active daily living, caregiving, everything for almost like $4,000 a month, including everything except the cell phone. And all these facilities are, for the spa and other and all, no charges. Actually, the seniors bring their own beauticians, and we have shows also. We have travel bus, I mean van that we have at every. We only build 88 to 94 units. We don't want to go 2-story, 3-story with elevators. We don't believe in it. When you are 80 years of age in a wheelchair or otherwise, we don't want them to lug up and down in elevators. So that's why COVID had 0 effect in our communities. We have built over 30 of them. And the good part is we had 0 death. And we had some COVID people who contracted, but we, secluded them, right? But nobody died or anything like that. So that's good to know. But again, the big thing is that we are able to show, I mean, all these great things we are building. Oh yeah, this is a good slide. So always we build one story brand new. We got models of 2022, 2023, 2024, 2025 in Florida, in Virginia, in Michigan, in Texas, in St. Louis, in Kansas City, in Arizona. I mean, we'll be building $2 billion is my goal, with a B, $1 billion developments, and love to get a lot of people join hands because we need that. And the good part is we like the seniors to come outside and then plant vegetables, plant flowers, and really enjoy the swimming pools in the warmer climate and do the waterfalls and really believe then to really enjoy. And then the putting green. I mean, we do all these things like the Williamsburg project in Virginia. I'll be coming there and love to have, if any investors are nearby, to come there to them. And we are building one of the best assisted living over there. Biggest 6 courtyards. These are 3. In Cape Coral, it's 3. Punta Gorda, it's 3. Palm Bay, there'll be, I think, 4. And Merritt Island, Jacksonville, Venice, Claremont, Palm Bay, Sebastian. I mean, we are building all over. And now the counties are getting the whiff of it. my partner and I, what we can do, they're even giving us their land, their land and the permits at cheaper rate so that we could build these exciting communities. It's very much fun. It's so exciting. I can't tell you. I can't tell you. Oh, I don't want to go that slide, but there we are. If you need a free book and all that, I also have written on senior housing, by the way, another really good book, ebook. Love to pass it out to you, brother. Alex, if anybody needs it, it just
Yeah.
kind of explains. I'm also in the midst of writing the book also, Senior Living Investing Made Easy. It's taken me some time, but I'm putting best of the best, my knowledge into this book, and of course, Vinny is always a salesperson. Profit positivity brings profitability on Amazon. I just rewrote the book last month. I published it, and then of course my apartment syndication made easy, and I'm right at about 700 million now, going to be a billion soon, portfolio. Yeah.
Great. So I got some more questions here. So what is the typical investor split between the general partners and limited partners in assisted living investments? Is it going to be similar to what
70-30, same thing. Yeah,
70-30?
it
Okay.
works 70-30 because see, that's where it is, because we want to give that 16% returns, like I mentioned, right? It only works numbers at 70-30. Yeah.
Gotcha. So yeah, so there really isn't too much of a big fundamental change on
No,
the
not
investor
at
split
all.
between these two
The
types. Okay,
only
that's good to
thing I
know.
want to say is that I did something bad. Well, bad in the sense I'm learning. In 2020, in the midst of COVID, I raised $16 million quickly, and I offered my investors to get cash flow in second year. I'm not going to be able to do it. I'm actually loaning money to the LLC to give them the cash flow in the second year because we just finished building the buildings and they're not occupied yet, right? So now my new model is third year. So you don't get cash flow first year, second year, but you get equity gain in third, which
And
is the
what
yeah,
are typically the investment minimums for doing something like, so
100,000,
let's say 100,000? Great.
100, 250, 500, and a million. So actually, my three projects are already sold out in the three coming up with 1 million, 1 million, 1 million, one. What? People are putting, just four people are putting 1 million, and that's what it cost me, about 4 million to 4.5 to build the whole thing with the loan from the bank and all that.
Gotcha. Okay. Another great question is, and I think you might have covered this, but just to kind of go back, do you buy any existing assisted living facilities
Yeah.
to do like a complete redo, or do you only try to do
Never.
development?
Never. I've been approached so many times, and God bless you all, because see, I want the best of the best product, and I can only do it with barren land. So I buy 5 to 7 acres of land, my partner and I, we buy them and we do the capture rate studies, and we have to do a lot of studies, by the way, because we are building a product which is going to come out in operation in 2 years. Remember, from the raw land to getting the permits going and everything, and all these meetings and the noise control and the soil, all those studies, right? So then we build it, then we stabilize. So we need to capture rate what's the need of the seniors and who can afford to live there and how many more permits are already granted in that area. So we build it from scratch. We don't buy any existing ones because it's hard to bring this kind of quality of A++ living in those things. Yeah.
Yeah, and I would assume that also goes into also making sure when you're trying to get these things occupied is that if you bought an existing one and you have a certain business model of how you like to build these to a certain standard, you
Yes.
don't want to necessarily price an existing tenant out because, it's probably bad for him to be seen as someone that's a
Totally.
big senior
Totally.
there.
Totally.
Okay. Yeah, we got another question here. How are you overcoming the healthcare employee shortage, at least here in Florida? Because a lot of these, with assisted, you have to have healthcare providers there on staff. Have you seen any issues with that, or how have you dealt with
Yes.
that?
Yes and yes and yes. I would say we are having some difficulty. If anybody in Florida, nearby, Cape Coral, Punta Gorda, Palm Bay, Orlando, Fort Myers, any nurses listening to me, please reach out to me, because we're looking for a wonderful nurse at the Punta Gorda right now. We got some resumes in yesterday, but we are still looking. Caregiving, again, we try to pay more than other people, which is good. That way, it's the compassionate business, and we are looking for that. We just hired the chef for Punta Gorda, Florida. And I mean, so we are always, and the labor has been a challenge. You're right, definitely. But you know what? We know these challenges are going to pass because we are vertically integrated. We manage all our assets. We start from ground zero, we build them, we lease them, then we manage them into productive assets.
And then typically, how many units do you typically build when you do these ground up? What's the typical number on the unit?
88 to 94.
88 to
88
94?
to 94. That's our sweet spot, because we want 7 acres of land to build this one story only with 3 to 6 courtyards.
Okay, great. And the last question I have here from someone is the 16% return that you mentioned, and again, these are not any type of guarantee, it's just what has happened in the past. Is that an internal rate of return or IRR?
Good point. I think if you look at, as you know, IRR is the time value of money, because we are paying that 48% in the third year. So it's going to come to maybe 14 or 15% IRR. I didn't do the calculations, but that's how you could see, right? I think we'll be giving like 48% in 2.5 years or 3 years. You could kind of look at it, because there is no return of the capital until third year, and your equity gain is also 2.5 to 3 years. That's why the IRR is a little bit lower. There is no waterfall, because I've done waterfalls, with value add things and so forth like that in my previous, and I still buy. I'm buying a hotel right now. I just got built in, $15 million, $40 million hotel in Virginia, accepted offer. I put an LOI on a very big hotel, a very nostalgic hotel, which is revenue is 5 million. I'm just saying that as example, in Texas. But the key thing is IRR is a great number to look at. At the same token, please check out the operators' track records, because IRR can be as big as you want by putting assumptions as much as you want, and it looks attractive with waterfalls and everything. But how would you deliver? That's the main thing.
Yeah, and I just kind of good thing that you bring up there. I just did a webinar yesterday with Dan Hanford about these. Yeah, great guy. We went over the 7 key issues for syndicator multifamily investors. That podcast just landed yesterday, and he brought, that was one of the points of the 7 that he looks at. He's very successful in investing in multifamily, and that was one of the points. I think it was actually point number 1. Point number 1 was experience in business for him, for the 7 red flags that he identified. So that's a very good point that you bring up, of looking at that of the operator and making sure you do your due diligence on them specifically when trying to identify this, because you can pad numbers and things like that, whether it comes to if you're factoring in things like a refi based on the calculation of the returns, and a lot of other kind of cool, or I shouldn't say cool stuff, a lot of the stuff to watch out for, because you can get those numbers can be tweaked by creative accounting pretty easily.
You said it so right, Alex. Operator, their track record, who is on the top, how many cooks are in the kitchen, I call it, how many chefs in the kitchen. Because if there are too many chefs in the kitchen, recipe might burn. I say that, so you got to make sure the partnership, how long they've been together, what kind of things they have put together, what's their track record, and who are the operators. It's not what you buy, it's what you build, in my case, and how you operate. See, buying is easy, apartment building or hotel or whatever. What any investor, passive investor, should see is how the operators are going to bring the cash flows and the value add which they're projecting in the business plan, how soon, timeline, constructions and other stuff, and have they taken proper consideration, and give them errors, omissions and errors, all these assumptions, right? So you got to make sure that you do full due diligence before you give your hard-earned money. I mean, that's
Yeah, absolutely. And the same individual asked, how do you evaluate the operator? I always encourage people ask if you're looking to invest with someone and the operator isn't willing to show you a track record of what they've done, good, bad, or indifferent. That should be, a big red flag if they're,
yes,
not being forthcoming about what they've done, because everyone wants to brag on their successes. And
yes,
if they don't have anything to brag on, then
yeah,
that means that they haven't been successful in
yeah.
what they've been doing. Which is, if you're having these operators be stewards of your money and hopefully good stewards of your money, then you definitely need to do that. And a
So
lot of these things, again, you can look at the offering documents, ask if they can put you in touch with other investors that have invested with them. If
yes,
they're trying to sell their investment, they should be more than happy to put you in touch with a few people,
yeah.
talk to them, and just ask is the biggest thing. You'd be
No,
surprised what you can get from people if you just ask a simple question. So that
so
would be what I'd recommend, and I'll put it over to Vinny, see if he has anything to add to that as well.
no, you're so right about it. So right about it, because it's not what you purchase. I say that, and I teach it in my academy, and my students are just doing great, great. But the key thing is, it's doing the best conservative assumptions is the number one thing. Make sure that we have the timeline, deadlines, and everything. But then, who is going to manage the asset to bring about the cash flow and the equity gain? See, that starts the day of possession of the asset. And who is going to operate? Is it going to be third party, or it's going to be self-management? Like in my big company, I had 153 full-time people, 153 full-time on my payroll, because we always kept on buying multifamily and operating them ourselves with regional managers, community managers, leasing people, asset managers, payroll, you name it, right? And the same thing we are doing now in the assisted living arena. Is just multifamily. I'm not in residential assisted living at all, because I just have, felt that I can contribute better getting 88 families to give and more jobs and other things, that way. But the big thing is, you got to make sure you do full due diligence, financial, physical, talking to the investors and making sure that you are putting your hard-earned money with the right person. Yeah.
And like I said at the beginning of this, trust but verify.
Yeah, exactly, exactly.
All right. And again, keep filing in the questions. We are kind of getting a little bit towards the end of this, but it's a great time to ask questions. You have a combined between the two of us, we have over 50 years of investing experience. I definitely have the shorter one, but we're certainly
Yeah.
happy to give you some good information here if you want to get some more questions regarding anything that we've covered or syndications in general, because Vinny, you have plenty of experience in that arena as
Thank
well. So
you.
I'll let you kind of advance a few more slides and get through the last of your slide deck before we open it up to full range questions.
Okay, super, super. So this is like the one free report on senior housing, and then you can all get free book also. My book and syndication for free at vinneychopra.com /free book. That'll get you also. And anything, I'm open to any more questions that you may have. Sure.
Great. Let's
Last one
see.
is this. Oh, there we go. Analyzing. Oh, that's the free book right there. And then is there question answer? Oh my gosh. If you're invested in passive investing in assets, you could go to my website. You'll find me there, And then another last thing might be the academy, I think, if I remember. I do teach. I teach myself. I'm no coaches, no nothing, but a lot of people really want to learn, how to analyze deals and how to buy, how to talk to investors. So I have an academy, group coaching, I have online academy, and then I have one-on-one coaching also. So
And we just had a question. What is the time horizon before an investor sees returns? I believe you mentioned that it was typically about 3 years for your development projects, correct?
exactly, it's 3 years, 2.5 to 3 years in the development projects. And then for my other cash flowing assets, like I just bought a multifamily in Tennessee. So we started paying the revenue, the cash flows right after closing of that asset, which was 60 days or something, So I buy hotel, like I'm buying hotels, 3 hotels, and I bought one for 6 million. This is all true numbers, 6 million in an auction, December of 2019, before COVID. But guess what? the doctors and the nurses chose our hotel to live in. So our hotel went to 12 million. What? After COVID. And I'm selling that hotel. We have 7.5 million, our own money, partners' money, into our 3 hotels that I'm buying now with my partners. And we are, we might open up to a few people close to us to invest in that deal and all that. So there are cash flows, momentum plays, but in the development place like senior assisted living and apartments, I'm building apartments and storage units and all that. When you're building something, you can't have cash flow. Dirt has 0 cash flow. Building, when we are constructing, is 0 cash flow. So it's in the 3rd or 4th year, many times, that's when you get big chunk of your investors' money.
Yeah, great answer.
Thank you.
Let's see, and I think that kind of brings us to the end of this. Let's put that up there.
Oh, there we go. Yay. All right.
And I guess here's just a general question. What are the benefits of investing in assisted living compared to other real estate investments? I guess as a broad scope, I guess let's compare this just simply to, let's call it just multifamily apartments versus assisted living. What are kind of the main benefits of the investment class?
The biggest ones I can say right now is that, remember, I've been in the C world, C plus, B minus world. These are 1980 properties, 73 properties. I did buy 2003, which I own, and I'm going to own it still. But the thing is, in these assisted living that we are constructing, they are A++, brand new, built 2022, 2023, 24, all the way across. And we built some last year also, 2020, 19 and all. So deferred maintenance is 0 because appliances are brand new, the unit inside, the air conditioning, the parking lot, the roof. So it's a beautiful place, less maintenance. And in the senior assisted living, what I've found is that the rents are 4,300 per month per unit, because we pay for, of course, food and other stuff and all, as compared to 1,300 or 1,400. So there is a big gap of extra revenue by the same number of units. Like 88 units, so 94 units brings about 4 million revenue to 5 million revenue in our communities, right? Which my property, 324 units, I own in Orlando, which I bought for $52 million. Hold on, $52 million gives me only $4 million revenue, 3.75 actually, less than that. So that's why it's a need-driven market in senior assisted living and memory care, which can bring large revenues.
And also, I would assume that from one of your previous slides, you had indicated that there is a higher stability of tenant length. You have a significantly higher, it's like 18 months or like 19 months was the average for the apartments, and then it was
30
several
months,
years.
30 to 35 months is actually whoever seniors come into our communities. We have memory care also, 18 to 20% of the units. We always build for memory care in a locked out, in the same building. So people move from there to dementia and memory care. We want them to be very comfortable. We also do hospice if they are, in the dying or things like that. So people who really come into our communities, they love to live there. And that's their golden years, I call it. Enjoyment and camaraderie and the grand pianos and dancing and the shows we bring into our communities. We want them to live to the fullest, before we all have to go up heaven, right? So the big thing is these are their later years, which should be the best years of their life.
Awesome. Great. Well, I think that's a good place to end it off. Again, everyone, thank you very much for attending today. We're very happy to have you here. If you want to grab the slides, they are attached as a handout to this presentation. If you do want to get in touch with Vinney, I'll go back to his slide real quick.
Thank you.
His email, Vinney@VinneyChopra.com right there. And VinneyChopra.com is also where you can find him.
Sure.
Again, thank you very much for taking the time out of your day today, Vinney. For being with us.
Thank you, Alex, and thank you everybody for watching, and God bless you. Have a wonderful, wonderful day.
All right. Thank you very much, everyone. Have a great day.
Have a good day.